Hey guys, welcome back. Today I'm back with a very good trading strategy that involves supply and demand, and also it will allow you to take high risk to reward ratio trades. So I'm going to break down this strategy into three simple steps. The first step is that if you are at lower time frame, for example, we can see here that we are at Euro GPY chart and we are at 45-minute time frame. Now what you want to do is, in the first step, you want to go to some higher time frame. For example, I'm at 45 minutes, so I will go to the daily time frame. And at daily time frame, at the real price section, I want to look for any key level that I can find. That key level can be a support zone or resistance zone, or it can be a supply or demand zone, any key level that you can find. For example, we can see that from this level, price is jumping multiple times. Here we can see that the price is being rejected below this line, and here we can see that the price is being rejected above this line. So this key level is important because whenever the price reaches this level, price reacts a lot. So we want to keep this key level in our mind, and I'm going to put a horizontal line in order to use this key level. So we'll put a horizontal line here. And now once we have detected that key level, in the step 2, you want to go back to lower time frames. For example, we were at 45-minute time frame, and now at 45-minute time frame, what I want to do is I want to look for any supply or demand zone that I can find. For example, there's a formation of this drop, base, and rally demand zone. Now if I want to draw the demand zone, what I can do is I can take a rectangle tool and I can draw the demand zone at the high and low of this base zone. Now if you are not familiar with the types of supply and demand zones, I'll put the link in the description to the video that completely explains what supply and demand zones are and how they work and how you can measure their strength. So for example, here we can see that there is the formation of this demand zone, and this is the manual way of detecting the demand zone. We can also use the supply and demand indicator that will automatically detect the supply and demand zones for you. For example, if I apply this indicator to a chart and if I remove this rectangle that I have drawn manually, so after calculating, you can see that the indicator has automatically pointed out this demand zone, that is drop base rally demand zone. Now the way to trade a demand zone is, at demand zone, institutions and a lot of big banks and financial institutions put their pending buy orders. So at the high of this demand zone, we will put our pending buy order as well. And we want to trade with the institution. We don't want to trade against them. But before that, before we put our pending order, we just want to go back to the daily time frame and confirm what is the overall trend in the market. For example, if I go here and if I zoom out the chart a little bit, let me just hide this. So if I zoom out the chart, we can see that overall trend in the market is in bullish direction. For example, here you can see that there is this bullish impulsive move, and then there is this retracement. Again, there is this impulsive move, then there's retracement. So if we look at overall trend formation, the market is making these higher lows and higher highs, which means that the current trend in the market is bullish. Now let's go back towards the 45-minute time frame, and at this time frame we have detected a demand zone at this place here, and I'm gonna again turn on the supply and demand indicator. So now we'll put our pending buy order at this zone, and market will come back at this demand zone to pick those pending orders, and it will then give impulsive move in the bullish direction, because after picking these pending orders, there's a lot of demand in the market, and whenever there's demand, the price goes up. So this is the basic psychology of trading the supply and demand zone. So now let's go ahead and foreplay the market and see. And here, as you can see, with the formation of this candle, the market picked the pending orders, and then now it's getting ready to move in the bullish direction. Now the step 3 is that whenever the market comes back to pick these pending orders, we should also be looking for the formation of any candlestick pattern. For example, here we can see that there is the formation of this bullish pin bar, and with the bullish pin bar, we are noticing that the buyers have a good momentum and they will drive the market in the bullish direction. So again, here we can see the formation of another demand zone. If I just foreplay the market, we can see that the indicator has also detected this drop, base, and rally demand zone. So both these demand zones, we have put our pending order at this demand zone, which were picked at this candle. And again, here is the formation of another demand zone, that is drop, base, rally demand zone. And let's see if the orders from this demand zone get picked. So again, here with the formation of this candle, the market orders or the pending orders got picked from this demand zone as well. And if I just forward play the market now, both our trades are picked, okay, and we are waiting for the market to move in the bullish direction. So as you can see, after picking these pending order, market is giving this very big impulsive move. Now, this is the move that we want to capture. And in order to decide our take profit levels, we use the psychological TP levels indicator, but you can also use the Renko charts. One thing that you have to keep in mind is Renko chart is available only for premium subscribers of TradingView on TradingView platform. So if I turn this off and let me just change the chart type to Renko charts. Now here, if I go at this point here, we can see that during the formation of this demand zone, the Renko charts were here, okay, at this level here. And in order to exit the market, in order to take profit, we want the Renko charts to turn from green to red, which happens almost here. So let me just forward play the market. So if we go here and see that not at this candle, till this candle, the Renko charts are still green. For example, let me just zoom in so that you can understand clearly. So here you can see that we are at this candle, and at the Renko charts, we are in the green zone. For example, this candle here is green, and also right now we are at this candle. So both these are in green, and the Renko charts is still in green direction. And when we took the trade, we started at the Renko charts when they were green. Now, if I again forward play the market, we can see that now we are currently here, and here there is the formation of this first red candle. So as soon as this red candle formed, for example, let's see, here at the close of this candle, the first bearish candle of the Renko charts appears. So we will take profit at these levels, and we'll close both these trades. So let me just show you the risk to reward ratio of these trades, and let me just go towards this time frame here, and here we want to take profit at the close of this candle. So I'm going to put a horizontal line at the close of this candle, and now let's go ahead and take the short trades and see, and take the long trades and see what the risk to reward ratio for these trades were. So we will put our entry here, we'll put our stop loss at the low of this demand zone, and we'll close our trade at the close of this candle. So as you can see that this trade gave us a risk to reward ratio of 5.44, which is phenomenal. And now if I just go ahead and check our second trade that was here, and let me just lower this, and also we'll lower our stop loss. So as you can see here, this trade, even though it seems a little bit small, but because of the low stop loss, we have been able to get a trade of 13.8 risk to reward ratio, which is again very phenomenal. And I have covered this in detail about the strategy and other strategies with the video bundle that comes with the supply and demand indicator. If you want to check out this indicator, please go to the link in the description, and that link will take you to the sales page. And if you want to check out this indicator, I put that link to this indicator in the description of this video. So if you're interested, please make sure to check that out. And the indicator comes with the psychological TP levels indicator that will automatically also show you the take profit levels for closing these trades or taking profit from these trades. I hope you were able to understand how this strategy works and how you can take high risk to reward ratio trades using the supply and demand indicator and the supply and demand trading strategy. One thing you have to keep in mind is that you will not always be getting these high risk to reward ratio trades. Most of the time you will either be breaking even or there will be very low stop losses, but the trades that you do get, those trades will be high risk to reward ratio trades, and those trades will have the potential to multiply your trading account. So I hope you like this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you guys in the next video. Thank you.